What's up, guys? Welcome back. I wanted to show you a few of the things that I'm uh, putting. I mentioned in the last video a few of the things that I'm putting stops behind. So I went ahead and did some of those. I calculated my margin and how much I need to get down. So I had a lot of margin specifically bought into IVV, and I want to drop my amount of capital in IVV significantly, just because of this high situation. So I have a 20 trail, which Robinhood, as you know, takes a minute to update, but this 703 is roughly right here. So pretty soon it's probably going to trigger. Um, so I'll get out of about 20 shares of those, and then my original shares that I had will continue to grow. So it was just like oh, look, it's low, let me buy a bunch, right? Now that it's up here, I can get out of that margin and no longer have to, pay on that interest. Amazon, I'm going to sell most of these because Amazon trend is relatively like sideways, um, and we're at the top of the trend. Okay, so it's pretty much up in this sell circle that I have. That could be significantly, that's about what I would do, something like that, touch it to the top of the trend. So it's pretty much at that range. It might keep going. I'm going to sell 19. So I'll put 19 trail stop right under this. If it keeps going, it'll trail that upwards and sell it for the better price. If it starts turning around and going down right now, then no harm, no foul. I'll be out with a little bit of profit. So IVV, Amazon, Apple is super like middle of the road. And if you look at this trend line I have, it's super middle of the road. So we're not really looking at Apple for a little while anyway. I'm thinking that Nvidia might like do one of those crazy like continue to go up. You can tell the the sell circle that I have is way up here, and the trend for Nvidia is super steep. So, that being said, yeah, I just put two here. And if it keeps going, we might put like two more here, and slowly get out as it continues to get higher. But I don't have a whole lot of these. 198 and 20 is 39. Yeah, 3,900, and so but I can just slowly reduce these as it goes up. I'm not trying to completely get out. And I believe the other one that I'm really went ahead and set a few for is Broadcom, because of this super high strength index here. Got 14, went ahead and put four of them on a stop. Although it's still going, I might change this real quick to a trail. We're at 397. So what we're going to do is take this and change it to a trail. Let's do like $3. So now it will trail that at 394. I would actually prefer it be a little bit further down, 390. So maybe like at least under that candle. There we go. And if this continues to the top of that trend, because it's about midway of the trend, if it continues upwards, then we will slowly be getting out more and more of Broadcom. It looks like we're pretty near the this previous sell circle over here. So anyway, these are just a few things that are looking extremely strong, and if you follow the stock market for very long, you can tell that extremely straight up climb. You just got to ask yourself, how sustainable is this? I mean, it's not. it's not uncommon for things to climb and then stay up there, but also I'd say it's more common for something like this to happen. Like, oh, yay, we recovered, but then it does a little pattern similar to this. It starts going up and down a lot, and then if it returns to this EMA average I have down here, um, then I want to be out a few so that you can grab them again low. That's the whole thing. So that's all that I wanted to share there. The pink lines I have are EMA 9 lines. I'm pretty sure 20. So I have 20 EMA 20 lines, color coded pink, and then the 50s are blue. And then I thought I was trading the 9 line for a while that was red maybe, but yeah, 20. So it just sort of certain stocks that move a little different. I might monitor one at a longer trend versus one that's a little bit more volatile. I might monitor at more of like a EMA 9 or a 20 trend. So that's the reason for the different EMA lines. But yeah, that's these selling a few here, a few Amazon, and a few IVV is going to get me back down um, into a lower margin range, and that's going to help me preserve my buying power and be able to get more of something else on the next thing that drops. All right, so just since the start of making this video, the stop sell actually took right there. So down to 50 shares, and just wanted to show you what all this is actually worth. Doing this, putting in the legwork. This is the sell right here that triggered, and that's 330 profit off of those 20 shares. So it might seem like a lot to purchase to be able to get this, but that's just kind of how the world works. So you're working off of percentages, so you got to buy a lot to be able to get a lot. So basically the only reason I do that is because I have the buying power available. So I want to get in heavily just to get a few hundred, and obviously that's the S&P 500, so it's gonna eventually go up. It's not like I'm planning on holding that forever. So just about a month of holding that is not that bad. Which ironically, 330 is how much the interest was on the full amount of margin that I had bought in over this past about month. So me buying these right here really just sort of pays off the interest. It makes it sort of net zero, and then of course I'll get a little bit of like dividends on top of this. So this that's pretty much the cost of the margin that I borrowed this past month, and then we'll go over to Amazon and put in the sale for 19. It took. We're still at a 90% buy on these ratings. The 19 sale took, and here it is at 253. 19 at 253, and that's 948. So there's Amazon profit, nearly $1,000, and then we will go over to, let's see, what else did I sell? Broadcom hasn't gone through yet. The futures that I sold here, these are the rollovers. So the first rollover was 14, and the other one was 1,200 in the negative on March 20th because of expiration was the next day. So let these expire, and then purchased it back. So after that, April 13th was a total of 651. And if you remember, I had 3 contracts. This was the sale of the first contract, -1 contract at this execution price, one, and then the other 2 contracts. I decided to go ahead and put a stop loss under there for these 2, and there's 32.92, which you have to take away the take into account the amount that I was negative. But if you go up to the futures chart here, it gives you a good representation of the difference. Now this number appears a little bit different than these down here. In my experience, it's a little bit higher, and part of the reason for that is futures uses mark to market for tax purposes. So this will show at the end of each day at 5 o'clock whether you're up or down. So this doesn't necessarily mean that I had to sell like these in the negative. Like this is just at the end of the day it was in the red. The next day at the end of the day it was in the green. The next day it was in the red. So it's gonna look like I had to make a bunch of negative sales, but really this was just holding and waiting for this moment here. So when you take 12.99 and then 14.92, okay, you got 27.91. So pretty much 2,800. That's how much I was down. Okay, then you take 32.90 plus this 651 profit. Okay, so this total profit, and you balance for this negative position that you have 30 right here is 39.41. Okay, minus 2,800 for the contract rollover, and that's $1,100. Yet this is saying 25.88. So we're going off of I just did an in-depth research on why this is so different. This number, I guess historically, Robinhood app is not that great at keeping this part accurate. I thought it was pretty accurate, but it's not. It's not showing my correct losses up here, and this isn't on the correct date. This 18th should be over here. So evidently this part right here might differ slightly from your actual prices, but if you go off of your history, it should be fairly accurate. So that's what I've done here. Essentially $1,100 is the difference. So yeah, apparently you can't go off of, even though this, I would love to have 2,500. That's not from March 18th till now. This adds up to be 1,100, not 2,500. So apparently this is just inaccurate. That sucks because I was going off of that for a while. But that being said, 1,100 is still good. That's what I thought I had anyway. So that 2,500 number really kind of threw me for a loop. But then IVV 330 and then Amazon coming in at 948 is come out to be 23.78. So that's pretty happy with that. So that is coming from roughly around March. So roughly about 1 month of monitoring, and you get 2,300. So yes, we got all this in 1 week, but it takes about a month to actually pull this out. So that's why it's good to have second source of income, something else going on. But 23.78, pretty happy to pull that out of the market and be waiting around for the next low spot to get in again. So anyway, guys, that's it for this video. Hope you found some of this information informative. Hope that you can take some of this information and apply it to your own account. This is not financial advice, but I feel like this is chart reading advice that you can easily take this and apply it to any size account and grow it, as you can see in the last video, significantly more than just the S&P is growing by itself. So if you need help with that growth, definitely take some of this into consideration, and feel free to ask me any questions that you may have. All right, thanks, and please subscribe for more.